So thank you for joining us today. My name is Valerie Brown. On behalf of United Policyholders, I'd like to welcome you to tonight's webinar on navigating the contents or personal property portion of your insurance claim. I'm going to give it just a minute in case some other people join us. So we're just going to run through some of the basics here. Mark, go ahead and go to the next slide. Sorry about that. So about United Policyholders, or UP, we are a national nonprofit. We've been helping disaster survivors and advocating for insurance consumers since 1991. Not for profit, not for sale. We're funded entirely by donations and grants. And as I've mentioned earlier, we are a trusted and respected nationwide nonprofit. And Team Up is our group of people that bring workshops like this to you. So we have a very small but mighty professional staff of about 11 people. We partner with government entities and nonprofits across the country. And we have volunteers who help with a lot of our programs. So we have our group of previous catastrophic loss survivors who are doing webinars now on the first and third Tuesday of the month to do a survivor forum. And then we have consumer oriented professionals such as attorneys, tax and financial planning experts, construction and real estate professionals that help as well. And before I forget, our website has a lot of information for you. If you go to www.uphelp.org/2020 wildfires, it gives you a very curated set of content that has a lot of self-help resources and materials, including workshops such as this one, which is being recorded tonight, to help you in the claims process. Next slide, there we go. And then if you haven't received our little yellow book, the Disaster Recovery Handbook and Inventory Guide, please send an email to info@uphelp.org. Let us know and we'll pop one in the mail to you. It's a great resource for those of you who are not as tech savvy to explore the website or honestly just feel overwhelmed by all the information on there. It's a great way to have a bite-sized pieces to help you navigate this process. And then like to thank our funders. So the Community Foundation of Santa Cruz County, Napa Valley Community Foundation, the Jewish Community Federation Endowment Fund, and the Jewish Federation of Silicon Valley and the Sacramento region. And then now let's get to the fine print very quickly. This workshop is intended to be general guidance only. We don't provide legal advice. If you have a specific legal question, we recommend you consult an experienced attorney. And then we do not endorse or warrant any of the sponsors listed on our website or the speakers that we have at our workshops. We are here as a self-help resource for you to help you through the claims process, but we are not that resource. And I saw someone raise their hand, and we're not able to stop this part of the program right now. So if you've got a comment you'd like to put in the Q&A, please go ahead and take that over there. And Mark, next slide. So today's presenters, myself, I'm the Senior Program Officer for United Policyholders. With me today is Mark Dillman, our staff attorney, and we will be sharing the duties here, switching back and forth with the topics. And then our goal of today's workshop is to help you get the full amount your insurer owes you for every personal property item that was damaged or destroyed up to your policy limits in the least time-consuming and painless manner possible. And so we're going to go through today basic strategy to document and list and value the items, producing available receipts, photographs, and other evidence, and then how to get extensions of time. Next slide. And so we start with the premise that insurance is the vehicle that you purchase to get you back where you were before your loss, but it won't drive itself. So we need you to be proactive to restore your assets, collect all available insurance proceeds, assert your rights, and ask for what you need. And the idea really is we've been doing this for nearly 30 years. We've gained a lot of experience with disaster survivors over the years who've shared what worked for them, what didn't. There are a lot of tips on our website, these workshops. All of this is knowledge that we've gained from working with people over the years. And we want to share that help with you so you don't have to reinvent the wheel. And then the next slide. Focus on documenting the full extent and the value of your losses. We always encourage you to give your adjuster or insurer a chance to do the right thing, but don't be a pushover just because they say it. doesn't necessarily mean it's so. And so you want to always ask that question of when you hear something that doesn't line up with when you read your policy, make sure you ask, can you tell me where it says that in the policy? Using leverage and negotiation are key to being able to satisfy and collect fully on your claim. And then we always recommend that you adopt the demeanor of being politely assertive. And then of course, getting help when you need it. And then, this is the hard part for a lot of people. The advertising for insurance always points out that like a good neighbor, or, it's this friendly family feeling of I have a policy, and you might be friends with your agent that you bought your claim from, bought your insurance through, but your claim is a business transaction. And there's this natural tension between you and the insurance company. They want to minimize the amount paid out and you want to maximize it. And so you want to make sure that you're able to view this in this lens, because a lot of times it feels like your insurance company is saying things and not hearing you, and they're following their procedure to be able to go through this business transaction. So it's just being aware of that and having that mindset. And speaking of that mindset, the next thing is just being aware that, next slide, please, Mark, is that knowledge equals power. And the more you understand about your insurance benefits, your rights, the value of your losses, the more that you're going to recover and the smoother your claim is going to go. And so just to point out, the website has PowerPoints that we've done from previous workshops. So if you need to know more about how to read your policy, things like that, all of that information we've covered in the past very recently, and all of that, those webinars are on our website for you to go back to and increase your knowledge. Next slide, please. And this is one of our adages from many of our survivors, just pacing yourself. Recovering from disaster is a marathon, it's not a sprint. Time is on your side. The longer your claim stays open, the more money you generally will receive. And just the reality that fully and accurately documenting and valuing these losses take much longer than most people think. It is a business transaction and you want to give it your best effort. And just putting in the time that it takes and realizing that it will take time. It's people's claims will be open more than a couple of months. It's years, and that's why for natural disasters, the state of California allows you up to 36 months to go through the claims process. Next slide, please. And so today's topics, this workshop, we are going to talk about these 6 topics. Knowing your policy limits for personal property. We're going to go through that with some examples. Options for completing your claims content, your contents claim, sorry about that. Documenting and valuing your personal property. We're going to discuss the lingo that you're going to find in your policy and that your adjuster uses, our RV, ACV, and depreciation. We're going to do a little bit of deeper dive into depreciation and why it matters. And then we're going to go through some strategies to help protect yourself during this process. So the next slide, knowing your policy. So you want to read that policy. You're going to be looking for limits on specific items, riders, and they're typically called a rider or a schedule that would increase coverage there. You want to be very organized. Every purchase that you're making, save all your receipts, scan them, keep track of it. Keep track of your communications. We always recommend that you have a journal or a notebook that you track all your insurance claim related communications and calls and emails. Just have that paper trail so that if you need it, you have reference to it. Always collecting who you spoke to, when, what was discussed, and then having all that in one place where you can find it. And then we always recommend, if you're able, to network with other survivors with the same insurance company and to see if they've had success in negotiating more favorable terms for you to meet your obligations for this. And so the next slide is an example of what your policy would look like. This is one of the examples. Coverage C is basically your belongings, what you would take with you if you moved, or conversely, what would fall out if you turned the house upside down and you shook it. And so think of, there's certain things that could fall into both buckets. Your dwelling versus that personal property. So think California closets, those are built-ins, versus Alpha container store shelving, which would be definitely something you could take out and move. Can lightings versus, certain types of lighting fixtures that you could take and leave with you. So on your coverage sheet, on your decks page, you will find your contents limit. Like I said, it's typically coverage C. So you're going to check the dollar amount for your contents. And the limit is usually a percentage of your dwelling. Sometimes like this one, it'll be a dollar amount, but sometimes it is a percentage. So you're going to check your policy for any endorsements, extras that modify the amount of your contents. You're going to check for sublimits on personal property items like firearms, jewelry, watches, computers. These are sublimits we'll talk about in a little bit, but it modifies what you're allowed to claim. And then those scheduled items that I mentioned earlier that can add value. Next slide, please. And so here you see on this one that coverage C is a different type of policy, it's AMCO, and so you can see where that is. Next slide. And so here's a blow up of a State Farm one, so you can see personal property on State Farm is actually listed as coverage B. So for everyone who has State Farm, my apologies if I confused you by stating it's known as coverage C. All the other carriers do have it as C. State Farm has it as B. And then more standard examples have coverage listed like this. All right, and then the next slide, I believe, is going to be special sublimits. And so typically in your policy, you're going to have special sublimits that state the total amount the insurer is going to pay for each category listed. So if you paid for a rider in your policy, that would allow you additional coverage outside of these posted limits. So these are not, sublimits are not additional coverage. It's within the bounds of your coverage C, okay? So some common contents limits include for money, it typically can be for, it'll range from $150 to $500, securities, $1,000, business property is usually very limited up to about $2,500, trailers, $1,000, computers, electronics equipment might be up to $5,000. This one limits it to theft of. And so these are things that would not apply for fire, but only for theft. So this policy, the example here, is limiting the loss of firearms to $2,500 only for loss by theft, not in the wildfire. Okay, and then thank you, Mark. Items that are not usually covered unless they're insured elsewhere, like jewelry, art with its own coverage, these things would be covered because they're insured elsewhere. Animals, birds, fish are not typically covered. If you have roommates, subtenants on your lease, their property is not covered. It's for the owner or the family unit that has the coverage. Motor vehicles are not covered by your contents, with the exception of certain vehicles not registered for use on the roads or for handicap assistant, and recreational vehicles are not also covered. So, and I'm going to turn this over to Mark now. And before I do, I am going to launch a poll with 2 questions. So asking all of you just to answer these 2 questions while you're listening to us, listening to Mark now, and I'm going to mute myself and disappear.
All right, thank you, Valerie. I appreciate it. And hello, everybody. My name is Mark Dillman. I'm the staff attorney at United Policyholders. If you've been on any of these before, again, I apologize that we can't be with you in person. We definitely like, being able to be there in them with everybody, but we're hoping that these webinars are able to be attended by most, and the fact that they're recorded and posted so you can go back to all this information that I'll be talking about, that Valerie just talked about. So it's available. So I guess that's one nice thing about having the webinars online. So I'm going to start off talking about options for completing your contents and personal property claim. And what I want to start off by saying is that these options that I'm listing here are not mutually exclusive in any way. These all overlap and are kind of different paths you can take, some of which should overlap. So let me get right into it. The do-it-yourself method. So an option for completing your contents. You can prepare a detailed list, your inventory, that describes everything that you lost and submit it to your insurance carrier. And later, as you replace items, send receipts to recover the difference. And we'll get into how to do that in a little bit more detail. And or option B, And this is something that everyone should be doing if they haven't already gotten some of this partial payment, is ask in writing for a full or partial policy limits payout and a waiver for all or part of the inventory itemization requirement. This is a very tedious task. Valerie will go into a little bit more about that task next, but asking for an inventory waiver so that you can reduce some of this burden is very important. So next, we are going to look at some of the California Department of Insurance notices, but these are going to be very helpful to reference to move your claim forward. And requesting a 100% waiver is definitely worth requesting, especially if you are significantly underinsured. A 100% waiver on having to itemize all options is worthwhile, whether or not you are underinsured. You know, the worst they can say is no. That's another one of our favorite phrases. The worst they can say is no. It's potentially less likely, but it doesn't hurt to ask. And if you can't get 100%, you may be able to get less than 100%. And again, putting some money in your pocket up front and lessening a burden that you otherwise might have. And C is hire professional help. This is an alternative, but like I said, these are not mutually exclusive. If you're preparing that contents inventory yourself, you should still ask for these waivers. Maybe you did start doing a content inventory yourself and now think that you require professional help. These things all overlap. So hiring professional help usually includes an expert, an insurance expert, oftentimes referred to as a public adjuster, one of many. Public adjusters usually work for a percentage fee of your entire claim. They will handle most of the insurance and inventory process for you. We'll get into a little bit more detail, minus assigning the ages to your contents, but hiring professional help is definitely an option for those who feel, and it's, you know, a lot of people, it is a daunting task sometimes, those who feel overwhelmed by having to go through and itemize all of your contents. So again, I mentioned the CDI notices, and two of them that I want to highlight are recent, from August 26th of this year and October 2nd. So we have the expedited claims handling and billing grace period procedures for California policyholders due to wildfires, again, August 26th, and personal property contents coverage for wildfire claims. And something I want to highlight is that the PowerPoints will be posted on our website. So we did put the links for easy access right down here. You'll be able to click right into the notice to be able to reference them in any follow-up letters as we go through some of the contents actually contained in these letters. So first was that letter, that August 26th letter. Commissioner Lara called on insurers to advance 25% of policy limits for total losses without requiring an inventory. If you haven't already received an advance payment on your contents, we suggest put in writing asking for some type of waiver of having to complete an inventory before you actually receive an advance payment, or any payment at all for that matter. This August 26th letter calls for 25% as a minimum. Again, you can reference these letters. This is something that insurers have been doing for the past few years. These letters go out and have been going out on an annual basis. Many insurers do follow them, but I want to segue this ask of 25% without requiring an inventory into this next letter that Commissioner Lara put out. And he calls on insurers to waive the requirement for completing a personal property inventory to collect all or a significant amount of personal property coverage limits. As you can see in the middle of the page, highlights there that in the past, companies have fronted 75 to 100% of the contents limits without requiring the policyholder to complete the task of actually itemizing all of the contents. Now, again, this isn't a guarantee. This is an ask. It's a voluntary ask. Many insurers have before. You may have heard a story or two about somebody who has gotten 75% or 100% of their contents fronted to them, but this is not always the case. So if you look down to the lower paragraph, at a minimum, Commissioner Lara has requested that insurers follow what will be the standard in July of 2021. This is not binding yet, but that no less than 30% of the limits be advanced for a total loss without an inventory if the home was furnished. So if you haven't received an advance payment of your contents, ask, you can ask for 100%. The worst they can say is no, but follow up and point out that 30%, that 30% ask. That is a bare minimum that has been asked by the California Department of Insurance. Go back, reference these letters, put it in writing, and get that money to you and put it in your pocket up front. So this list is a list based on that notice, that October 6th notice. It lists the insurance companies that have agreed to offer at least that minimum amount of advance payment without an inventory. And those first two columns there are all the insurers who have agreed to that minimum amount. The top column on the right is insurance companies that have offered less than the requested amount, and then those on the bottom who have not responded to the request yet. So I do want to make a note that you do need to discuss the requirement to still complete, skipped ahead there. You need to check with your insurer to see exactly what relief is being offered. When we say minimum amount, ask your insurer if they're meeting that 30%, are they meeting that 70%, and ask for those same benefits. So I want to point out that if you are not receiving full 100% waiver of listing and going through your contents, to recover that additional amount. So say that you do have 30% waived, you get that 30% of your policy limits up front. In order to collect anything more than that, you will need to go back and start from the beginning and list all of your contents to get the 31% through 100%. So what this advance does when it's being given at 30% is it puts money in your pocket up front, but you don't want to sit on your hands and perhaps not start the process. You do want to keep in mind that the process will likely still need to be done if you want to recover anything more than that 30%. And let me next go to some of our survey results from previous disasters, where we asked if your insurer required you to submit a detailed itemized home inventory. Now, these results are telling, but also keep in mind that there is more pressure and has been more pressure for insurers to advance more monies from coverage C. So you see a split. You see about a half and half split of yes and no, and then you see almost a quarter split into they offered less than full policy benefits in exchange for no itemization. That's about 25%. You see they paid 100% without requesting an inventory. Again, this is less common than the majority. Oftentimes, this is the case when an insured is highly underinsured, and it's clear that policy limits will be reached anyway. Not all the time, but that is often the case. And then we see again, 20%, they strictly enforce the policy requirements, and then yes, but they allowed bulking items. So again, multiple ways you can start the inventory yourself, ask for that advance, and you can also seek out professional help, such as a public adjuster, to help you in this process if it becomes overwhelming. And unfortunately, often it does. So those are the options. And with that, I'm going to hand it back to you, Valerie.
All right, thank you, Mark. So we're talking about, so this next section is documenting and valuing your personal property. So we're going to start with the basics. And this was actually a question that popped up. So if they're insisting on a detailed inventory, you're going to start by gathering available receipts, photos, records that you have, and ideally getting help from the adjuster to help build that complete and accurate list of everything that's damaged or destroyed. If you have State Farm, you can request they provide you assistance, and they should assign you someone to help. If you have an outside adjuster who's not within State Farm, but you have State Farm insurance, you might need to go up the chain of command until you reach someone within State Farm to give you that. They're one of the few insurance providers that provide that option. And so the next thing is trust but verify the evaluations that they give you. So even if you've got someone helping you in the insurance company, you always want to verify that when they give you that list back after they helped you build it, you want to verify the pricing. You want to make sure that it's complete and comprehensive. Someone was sharing in the comments that someone had in a 3-hour interview had provided their contents listing. 3 hours is not a lot of time to put into it, so there's probably a lot that's missing, but it was certainly enough for that individual to get 100% of their claims. So on our website, we have some free tools that you can use. So to claim inventory, tips, sample files. There are a couple that have been provided by previous survivors that are very detailed. And so you can take those Excel spreadsheets and make them your own to reflect what you had, but it gives you that running list of things to be looking for. Mark, next slide, please. Mark, thank you. All right, and so here's information on the website that you can look at. So you can download all those sample files. So we have the examples, our blank Excel worksheet, depreciation information, sample letters to request what Mark said, that waiver of the itemization requirement, asking for a personal property settlement, getting a copy of your policy if you still need to do that, and that bottom slide, that bottom image there in the center is just an example of what that would look like. Next slide. So I'm working with the assumption that you're having to build that list. And so, the suggestions are, take one of these lists, use one of our blank templates, one from someone else, whatever you've got to work with. And you're going to go room by room, topic by topic, category by category, whatever works for you. It needs to be how you think. And so some people are very comfortable just listing stuff. Other people need to go room by room and then go, category by category. And so it's however you think. And then use family and friends to help complete that inventory. Once you get that document created, share it with them. They might be able to list things in a room for you. They might have photographs that they have taken at your home previously that they can share that shows what you had. One of the ways that we recommend now with COVID, it makes it a little more interesting. So being safe and making sure that you are being safe when you're doing this. Stores that have those gift registry scanners, so you can create, the wedding inventory, the wedding shopping list or the baby registry, take advantage of those. Go in and just scan the things you would have. That gives you a chance to build pricing and a list and give you real current data. Or you can use the internet to build your list. A lot of these stores also have online registries. So just being able to go through that. And again, make sure that you use your friends and family who are offering to help to be able to help in that space. And as Mark said, this is a massive task. And so, celebrate every success, no matter how small. One of our volunteers lost her home in the Thomas fire. And she said she and her husband treated it as a room by room. It was because they were both retired. And so she said it was the only paycheck she was going to get. So every room they celebrated, went out to dinner when they turned in their list, because it was a victory and they were going to get paid for their effort. So, however you need to do to get the mindset to get this done, making sure that you do that. All right, next slide, please.
Val, if I could jump in, I just want to hit something very quickly. And I apologize. I know there are a lot of people on. We see some questions that tie in here, and we say start with a list. Something that goes along with the voluntary claim handling reforms that I was just speaking of, the fronting 25%, is also the commissioner has asked to accept any reasonable list that provides basically the same information on that the form that the insurer gives you. So you should be able to use your own list. If there's any question about it, email your insurance carrier. Many of them, as you have signed on to adhere to these voluntary reforms. So just make sure if you're uncertain, put in writing. You say, hey, I have this spreadsheet. It provides XYZ information. Yours has XYZ information. Can I use my form? And just confirm. So I just wanted to throw that out there because I know that's another question.
For that question, yeah, no, thank you for that. So you've answered Amy's live. Got it. And then actually, before we jump from the list, Diane and Ralph had a question about contents appliances being considered property with State Farm. So typically, if it will shake, like the fridge is usually, if it's a built-in, it could be considered under the dwelling, but a lot of times these are considered under your contents, personal property. But with State Farm, you're saying they're considering that when you say section A, I'm assuming you're meaning dwelling there. It's part of the dwelling coverage. Mark, what do you have on that? That's a different one from me. Usually the appliances, unless they're built in, I've always seen them considered as personal property.
Yeah, so what, oh, I apologize on my video. So yeah, this is something that goes back and forth with the adjusters as well. We've seen sometimes the stove gets included, sometimes the refrigerator gets included, sometimes it goes under personal property. I'm not sure, there might be a right answer to that, but I have seen it under both depending on your adjuster, and depending on coverage and limits, you might be able to use that to your advantage. And I've seen some adjusters that have been friendly and help move those items around.
Yeah, and that would be anytime you get a pushback on that, like I've seen lighting be on the list for contents, and I've seen it on dwelling. And so honestly, whatever's going to work to your advantage dollar wise, look at that and see, and then have that conversation with your adjuster. So let me jump to step 2, and then Mark, interrupt me if there's any questions that pop in there that we're able to make sure we address live here. So adding to your list. So the suggestion is to keep a running list with you. Having that pen and paper by the bedside. Talking to people on a webinar Tuesday, and they said they were waking up in the middle of the night, jotting 2 things down and then going back to sleep, and they were growing their list that way. A lot of people keep a note on their smartphone that they can just add to when they remember things, or somebody says something, or they're in someone else's house and they're like, oh, I had 3 of these, let me write this down. One of the best tricks that we've found with other people is checking with your bank, your credit card company, for records of previous purchases. Some stores will keep records for several years, especially Costco, Home Depot, Amazon. They may have, they'll have, some will have a lot of detail. Some of them are just, it's proof of this is where I bought things. So you have that documentation of where you typically shop. And then try visualizing the room you're working on. So walk around it in your mind, open the drawers, the cabinets, looking inside. Some people say it's helpful to speak out loud to record what you're saying, or have somebody taking notes. Whatever works for you to make this work, just focus on how you think and how this works for you. Next slide, please. Estimating quantities. This is probably the hardest thing for people, just to figure out how much of what you had. Books and CDs are easier generally. They're in stacks or on shelves. So the question is going to be estimating the amount of shelving you had. So if you can go into a Barnes and Noble and you can eyeball and said, I had a bookcase that was 2 feet wide, 3 feet wide, whatever, had 4 shelves. This is the type of books I had. Barnes and Noble, they've gotten very used to being used that way. So don't have any shame going in with a tape measure and figuring it out. You can do an average by price by type. You can do all that research online and do a calculation. The same for clothes. I would just suggest, if you know the rough dimensions of your closet, just ask a friend to just measure how many are in a square foot, and then that gives you a rough number of what you had. And then rough dimensions on anything you've got, any storage units, any containers, closets, cabinets, anything that you can look at someone else's, or you can look at in a store and say mine was roughly this size, because the sizing and the estimating of quantities is just really difficult for people if you don't have that in front of you. And then the next slide is pricing. And this is included in the duties after loss that's listed in your policy, is that you have to list the replacement costs of the damaged personal property. And so again, this is using that gift registry online. You don't want to use sales prices, because by the time you replace it, those items may be already gone. Again, contacting your credit card companies and banks for copies of old statements. But just be aware, when you're looking to replace, it's not the price purchased at that you're worried about, it's the cost to replace. And Bill, I see you had a question about purchasing replacement items. And yes, the reimbursement with depreciation, we're going to cover that in the next section. But yes, at the end, when you submit those receipts, you will be made whole on those. And again, just one of the biggest tips is just figuring out how to divide and conquer this. Take advantage of people who've offered to help you if you have them, ask them to document a price, a page, a room, a list, or create the backup documentation and PDF it so that you have it. Working with other people, working with other survivors. In my fire in '07, we had pricing parties where we got together and somebody ran all the spices and somebody ran all the cleaning supplies and we worked together to build a list that helped make all of our needs. And even with COVID, that's still something you can do, connecting with other people virtually on Zoom and just kind of sharing the pain and the load and making it where it's manageable to get as much done as possible, as painlessly as possible. Mark, next slide. I think that's actually you. Actually, hold on, before Mark, go back. I'm so sorry. So one of the questions that came up was about antiques and collectibles. We always caution people to stay away from eBay, things like that, because again, that pricing is not set for what realistically those things may cost. And that item that you're there, that if you grab that pricing, it might not be available when you go to replace. And so for antiques and collectibles, pricing from antique shops, you can ask and look at, sometimes you can look at their catalogs online. I had great success just picking up the phone and calling and saying, I'm looking at this. Can you send me your pricing catalog? Or do you have something that matches this? And could you give me that as documentation? A lot of stores will work with you if they know what you're looking for. And one more thing to be aware of, artwork and items that you've created yourself, they're only valued at the cost of the materials you used. So be aware of that. So if you were an artist and you had your art in your home, that valuation is going to be for the materials you use. For other artists' work, it would be the cost to replace that. All right, Mark, I'm ready. Sorry.
No worries. I appreciate that. All right, Val. So we're going to go to learn the lingo. And, some folks, you may have heard these terms thrown around 100 times, 1,000 times. You may be sick of them. These may be new terms for some of you, but we do want to just cover them. They are important moving forward. And if they're not already ingrained, I'm sure they will be. We often hear people learn way more about insurance than they ever wanted to throughout this process. So I apologize, but we are going to take these in turns. So we're going to talk about replacement cost, also shorthand RC. Sometimes you'll see RV for replacement value, but oftentimes it's RC, replacement cost, actual cash value, ACV, and depreciation or holdback. So let's start off with replacement cost. RC is the price that it would actually cost to repair or replace a damaged or destroyed item right now with a new item, a new couch, a new mattress, a new shirt. What would it cost to go to the store and actually purchase that item? That's your RC price. Most homeowners policies, but not all, are replacement cost policies. Something to keep in mind as we walk through, all of these terms are important, as we'll point out going into ACV, but replacement cost is the majority of policies. So actual cash value, ACV, is the pre-loss value of an item. We summarize it, the price a willing buyer would have paid you immediately before the loss. It's the item depreciated to what its value would have been an instant before the loss. So again, multiple ways to say the same thing. Sometimes we also hear the term, the Craigslist price. Some policies do limit payouts to actual cash value, and that's all they pay. So again, check your policy, and we'll get into that a little bit more in a second as well. Is it replacement cost? Is it a replacement cost value policy, or is it an actual cash value policy in terms of what they owe you at the end of the day? So actual cash value is usually defined by this formula that you'll see, and actual cash value equals replacement cost, as we just discussed, minus depreciation. And finally, the third term in that formula, depreciation. Depreciation is the loss in value of an item due to age and condition. Normally, that means wear and tear. So along with depreciation, you may also hear similar terms that are used in depreciation discussions, such as holdback, the amount held back. I think I mentioned it before. It's the depreciated amount, the holdback. You also hear it called withheld, recoverable depreciation, and in terms of an ACV policy, perhaps a non-recoverable depreciation. But all are talking about the similar concept there. And I am a very visual learner, so I like to have the visuals here just to be able to get the grasp of the concept that these values are supposed to be, somewhat equal here. You have the replacement cost, that cost to buy the new couch, and that equals the actual cash value and the depreciated amount. So the actual cash value, the value of the couch an instant before the fire or the disaster, what you are owed until you repair or replace. We'll talk about that in just a moment. And the depreciation, the deduction value due to wear and tear. I think those two silos should be equivalent in terms of what the spreadsheet looks like for your contents claim. So you have a replacement cost policy. Why is your insurance company only paying the actual cash value? So your insurance company might initially pay you or initially hold back an amount of money from a payment you use because of depreciation. So most policies have what are called loss settlement provisions that specifically state that you are owed the actual cash value, again, the replacement cost minus that depreciation, until the property is repaired or replaced. So then to collect that amount that you're fully entitled to under an RC policy, you have to actually replace that property and send the receipts to your insurer and then demand the balance that they owe you, that difference above and beyond. So let's keep moving forward here and look at loss settlement provision section in a policy. And again, I believe this is a State Farm loss settlement provision. And there are a couple of things I want to note in here. Well, let's start with this overall, the loss settlement, where it comes from in your policy. So for this State Farm policy, and again, all policies look different. Yours might look similar. You might have a similar State Farm. You might have a different carrier. It might look a little bit different, but this is the general principles still apply. So here under this loss settlement section, you see B1 and B2 that are circled in the two red circles here. And this is a this or that type of ordeal. It's either going to be the limited replacement costs loss settlement or the depreciated loss settlement. So essentially B1 is do you have replacement cost coverage? Here's what applies. Or do you have ACV payment owed? And here's what applies. So let's go through, actually, I'll click forward to show this will be determined, or you will be shown which you have on your declarations page. This is the same policy that Valerie showed you before, and it just shows, the bottom left is of this declarations page is blown up to show, okay, loss settlement provisions. Okay, this person has B1 limited replacement cost. So let's go back. So in B1 under A1, it basically is laying out that until repair or replacement is completed, we will pay only the cost to repair or replace less depreciation. So that actual cash value amount. Going to 2, after repair or replacement is complete, we will pay the difference between the cost to repair or replace less depreciation and the cost you have actually and necessarily spent to repair or replace the property. So again, here is that difference where you make up the difference between that actual cash value and that replacement cost. However, it's important to note that it is up to the amount necessarily spent to repair or replace, up to the agreed amount replacement cost. But here, let's use an example. So say that you bought that, or you had $1,000 couch. You had a $1,000 couch in your home. It depreciated down to $500. But you had it. You purchased that $1,000 couch. They depreciated to $500. You replace the couch for $750. Your insurance carrier is initially going to pay you that $500 for that couch. That replacement cost value minus the depreciation. They're going to pay you $500. You're going to have that in hand. If you replace that couch with a $750 couch, you are going to receive that difference between what they've already paid you and the $500 and the $750. So you're going to get $250 when you furnish that receipt up to whatever the agreed amount replacement cost
Mark,
of that property is. We don't need to.
Mark, can you talk about like the receipts and the documentation, that because the receipt is for the providing the receipt for what you purchased, what you lost, is you're setting that value, whether you have that receipt or not, is you have the proof that you have, but it's what it would cost to replace that item you had. Can you clarify that?
Sure. So if I understand so you build this contents inventory, and you're, again, like Valerie mentioned, it's this negotiation. You agree during this negotiation with your insurance carrier that to replace, this item that you had in your house, the couch, it cost $1,000. So the couch has been destroyed, and you're going to go out and you're going to shop for another couch at some point, perhaps when you move into a new home, and you're going to be given a receipt that may or may not match that exact dollar amount that you negotiated. So again, the receipts and recovering withheld is a little bit in the future. You don't have to necessarily worry about it now, but you should still be collecting those receipts. But the amount that you actually replace that damaged item for is going to determine how much you end up receiving more than the ACV payment that has already been distributed. Does that make sense? Does that answer what you were asking about?
Yes, thank you.
All right, so I apologize. I'm going too far into the weeds. I don't mean to confuse, but I just want to clarify what those sections actually meant. So let's go on to A3 here. So if property is not repaired or replaced within 2 years after the date of loss, they will only pay the cost to repair or replace less depreciation. So this is basically putting a 2-year time limit on the ability to replace and furnish these receipts that I was just mentioning. We'll talk about in a couple of slides how or following a state of emergency or disaster, that this time frame is extended regardless of what your policy says. So I just wanted to highlight that even if you see that part where it's limited to 2 years, it actually is longer than that. But again, we'll talk about that in just a moment. And then further, under B1, like Valerie was also just mentioning, this policy says we will pay market value at the time of loss for antiques, fine arts, paintings, and kind of goes into these items that should not be depreciated off the bat. So some items are not subject to depreciation. I believe it then goes on to highlight memorabilia, souvenirs, collectibles, and fair market value is owed for those items. So continuing on loss settlement for just one moment, you may see in your policy that the loss settlement provisions set out actual cash value. This slide I want to show is that there may be an endorsement that changes it. So if you do see actual cash value listed in your policy as the loss settlement provision, just look into additional coverages, those endorsements, to see if you have something that changes that in your policy. This is a renter's policy, but it is applicable to both homeowners policies and renters policies. So again, there is a time limit to collect RC benefits. We just went over in that last policy example that they said there are 2 years to collect this difference between the actual cash value and the replacement cost. However, California Insurance Code section 2051.5 sets out that a time limit of less than 36 months from the date of first payment towards that actual cash value shall not be placed. So you have 3 years in order to collect that replacement cost, regardless of what your policy says, if the loss is to a state of emergency. It also later sets out that additional 6-month extensions shall be provided for good cause. So hopefully not a consideration or a concern right now. We just want you to know that that's what the timeline actually looks like. So let's keep going with depreciation and why it matters. Coming up with the cash to buy replacement items can be difficult, especially when insurer has heavily depreciated your property. Your insurer typically depreciates, as we discussed, the value of your damaged or lost property to account for the used condition and age, and for all items that are covered for replacement cost value. Unless the insurer relaxes or waives the requirement, as we discussed earlier in this presentation, you often replace and submit proof. So the more, or less, I should say, the less that they depreciate upfront, the more money you have in your pocket to go ahead and replace it's more of the items that make it onto that contents list. So there are a few big takeaways from this presentation if you learn nothing else. And one of the most important takeaways is depreciation is negotiable. Again, I know I sound like a broken record, but the more depreciation the insurer applies, the less you collect upfront. Remember, there is no official standard for how much insurers can depreciate your property. It's not cut and dry, one size fits all. It is negotiable. It can be hard to pin down an adjuster for how they calculated it. Challenge the numbers if they seem unfair. I'm not saying you can increase every percent because there's no official standard, but you are the one who knows the condition of your property and what your personal property looked like, what its value actually was. You saw it, you handled it on a daily basis, and they might not have. So challenge the numbers and fight for what you are reasonably owed. Again, be aware of items that should not be depreciated, as we've discussed: antiques, fine arts, jewelry, from the start. And after writing, that your insurer give you a copy of the depreciation schedule or method that they used, so that you know what's going into these calculations. So I want to go over a very important regulation here, 2695.9F. And I broke this up. It's almost verbatim here, but I want to break it up into its 4 parts. So the first section lays out that justifications for depreciation must be contained in the claim file. The second part goes on to talk about adjustments. They must be measurable, accurately reflecting the depreciation. Third, you'll see is bolded here. Any adjustments for depreciation shall reflect a measurable difference in the market value attributable to the condition and age of the property and apply only to property normally subject to repair and replacement during the useful life of the property. Again, really on the fact that they must consider age and condition, and that it only should be applied to property that is subject to depreciation generally. And then finally, the basis for adjustment must be explained in writing. So again, age isn't everything. Even if it was old, it may have been in good and excellent condition. You can argue that there's a remaining life expectancy for some items that is longer than the depreciation schedule that they have assigned to it. Only you know the condition of the items that were destroyed. So this is where you can push back. This is where, if you have photos, if you have people who know you that know how well you took care of your items, kind of backing up claims that, well, let's just go right to the next slide, that, hey, our couch was in pristine condition versus, a 5-year-old couch was heavily damaged. So again, back to the visual, one that is so simple, but so telling: age and condition. And the reason that we keep dwelling on the fact that it's both age and condition is that in many other places, many other states that we've seen, age is the only factor. You type in, okay, the couch was 5 years old. This is a number that's spit out. In California, specifically in the regs, it sets out that the condition must also be considered. And if you're dealing with an adjuster that's outside of the state of California, they may be accustomed to just punching in that number and moving on. So age and condition here, you have, this reminds me of my grandparents. I always tell the same joke here. A 5-year-old sofa might be 20% depreciated if it's like anything like my grandmother. She was one of the people who had the plastic top of the couch. I joke that the couch appreciated. It was actually worth more after 5 years being at her house than at the store. And on the right, you see me and my 4 younger siblings growing up with the pets trashing the 5-year couch. So that couch may be depreciated 80%. So again, just nailing home, again, I'm a broken record, that condition plays just as much, if not more, of an important factor, and be sure to use that when you're negotiating with your insurer. So again, be aware of excessive depreciation. Negotiate depreciation and ACV holdbacks on a case-by-case basis to reflect the condition of each item. Depreciation guides can help you determine the value of your contents as well. We do have some listed. Go to uphelp.org/samples. We have some good guides that show you a ballpark of roundabout areas, percentages that items a certain amount of years old should be. Again, it shouldn't be relied upon because condition comes into effect and only you are only you know the condition of those items. So if your insurer applies a fixed percentage across all items, you can push back against this method that really shouldn't be used, or you can negotiate a favorable fixed percentage. Sometimes it is helpful to your claim at large, but that's just something else to look forward to, or look out for, excuse me, to look out for moving forward. So with that, I'm going to take a breath here and hand it back over to Val.
Thank you. So we're going to talk about protecting yourself. Mark, there are a couple of comments about fair market value and some stuff in the Q&A if you've got a chance to answer some of those. I saved some for you deliberately. So about protecting yourself. So one of the biggest cautions is to never intentionally claim items you did not have. So just be aware that if you have a feeling that your adjuster is going to lowball or things like that, don't inflate the value, the quality, the quantity of damaged or destroyed items to counter that lowballing. You can make innocent mistakes. They're very common. That does not amount to insurance fraud, but insurance fraud, that intentional misrepresentation, is a felony. So it can jeopardize your entire claim and subject you to severe legal penalties. And so just, focus on what you had, documenting what you have, and working with your adjuster with providing whatever documentation you have. I mean, one of the biggest challenges here is that the reality is your documentation was lost with your property. And so you can only provide the documentation you have for the items you had. So, and that's why we talk about going with photos that family and friends might have from when they were in your home, digital photos that are accessible, those bank statements, those credit card statements, things that, as much documentation or proof as you can provide. And then being very clear, if you had things that were handcrafted, being very, very precise in the description of that item. So I had hand carved, custom made wood furniture, and my dining room table was this, so that when you're showing what you had and you're looking at what that replacement would be, you're showing that it's like equals like. And so be very clear there. Mark, the next slide, please. So being organized, and we touched on this earlier, but it's just really important. So everything that you're purchasing right now, any of those items from the clothes from when you first started shopping for things, to consumables to replace, to furniture, to household items, just make sure that you save all those receipts, copy them, scan them, take a photo of them with your camera, email them to set up a separate email account so you keep all that stuff in one place. You want to have a copy for your records. You don't want to provide the insurance company, when you submit any of that stuff, your only copy. You always want to have backup documentation. You want to track all your insurance contents, claims, communication. You want to track all your contents payments. We have a CPA who lost his home in the Wildfire, who created this insurance accounting spreadsheet that's available on that link right there. Please download it. It's an easy way to keep track of what you've been paid in each of your coverage buckets, so that you're always clear on what you have. And one of the other tips that came up to be organized is just opening that separate bank account when you're replacing items, so that you're able to track what you've got. Next slide, please. So being strategic, and several of you have asked in the comments about, do I need to track receipts for everything? So we realize that you're very unlikely to replace everything that you've lost, and it's a hassle to keep providing receipts. So you want to try to maximize those ACV payments by arguing for lower depreciation, which Mark touched on, especially those big ticket items, and then identifying the true replacement costs at standard, not discount retailers. And this is getting back to the, we talked about this earlier in the workshop. It's okay that this is going to take time. Please don't view this as something that you're going to knock out between Thanksgiving and New Year's, okay? It takes time. It's a lot of time. It's a lot to remember. It's a lot to think about. And so you want to prioritize in prioritize your entire insurance claim. Make sure you've got your temporary housing situation settled while you're working on your dwelling to make sure that you get home, before the temporary housing runs out, and you're working on your claims, your contents claims in the middle of this. So keep everything moving. Don't just focus on this exclusively. A lot of adjusters will bring this up. How are you doing on that? And part of it's just a checking in and reminding that you have to do it, but it feels like it's a pressure to get it done. And most people, it takes a year. They'll work on this for a year or two. You have up to 3. I have a friend who lost his home in the Cedar fire in 2003, and he was doing his 5 years later. He kept getting extensions because he just felt like he had to claim everything. And so, not that you need to be like that, but you need to know that you've got time for this. And so take your time, make yourself as balanced as you can be now, because you've got a lot of competing priorities. And so, being strategic in your contents claim, but also being strategic in how you're managing this whole claims process. Because the reality is it's like you've inherited 6 full-time jobs on top of your normal life. You get to be doing construction, you're doing contents, you're doing claims adjustment, you've got to be an insurance expert. Sometimes you feel like you have to be a lawyer, you're a personal shopper for everybody in the family. And so there's all these different roles going on there and tasks that are on you. And so please take time to take care of you while you're doing this, so that you get these things done in a way that works for you and your family and gets you where you want to go. Next slide, please. And going back to our strategies for dealing with your claim. So be politely assertive. So, I take the position you're in the right here. Your insurance company cash your premium payments in return for promising 3 things: peace of mind, reimbursement for a loss if you incurred one, and prompt claim service. Your contract, that legal contract that you have with your insurer, entitles you to all 3 of these things. And these rights are protected under the laws of your state. And this is why it's so important for you to keep documenting, take good notes about what's been agreed upon and what's still working on. Because one of the things that will happen typically as the claim stretches on is that your adjuster will change. And so having that, that documentation, and then being able to just politely say, this adjuster said I have this, so that you can remind them this is where you are. This has already been handled. We've agreed upon it. And this shouldn't be up for negotiation here. You're being very polite about it, but you're also pointing out, we've already decided this, keep this moving. And then that feeds into our next slide, which is about best practices for communication. So always try to get it in writing. And if that initial communication with your adjuster is not in writing, a lot of them will just pick up the phone. It's easier, it's faster to get back to you that way. So if they didn't give you the understanding you have in writing, put it back in writing to them. Send them an email, send them a letter, confirm your understanding. Anytime you have a phone conversation with them, always document back that, per our phone call today, this is my understanding of what we discussed. If this is not your understanding, please communicate back to me in writing and let me know. It doesn't mean they're going to write back to you. They're honestly probably going to pick up the phone again, but that's okay, because the next time they call you and they clarify it, you're going to, again, put it in writing back to them with an email saying, thank you for your phone call. I understand this now. Please make sure this is correct and let me know. Keep it professional, be concise and to the point. Some people write, many books to their adjuster, and the reality is the adjusters are handling a lot of claims. They might be from out of state. And so making it as very clear what your needs are so they can help meet those needs is key. Bold or bullet your request to make it, again, very clear what your needs are, using proper grammar, punctuation. When they respond to you, please respond to their letters and their reasonable request promptly, so that you're building that case of you've been very responsive, and you've been meeting all the wickets to get your claim, and you would just like to be paid promptly. And then avoid venting your frustrations and emotions to your adjuster. They are people too. Save that for that friend, that loved one who's that safe space for you. Trying to keep it professional with them so that they respond to you professionally. Next slide, please. And then, as I mentioned earlier, doing what's best for you and your family, because no one but you can understand and determine what your tolerance is for this process. It's complicated, and there are a lot of people who will, hold. They will hold and say, I'm willing to take this just to not have to do this. Or other people like my friend in '03 who was just, I'm going to get every penny as I remember things. Some people may desire to recover every dollar to be made whole. Others may settle for less, knowing they're leaving money on the table. It's whatever works for you and your family and your finances. There's no judgment here. As I mentioned earlier, you're juggling 6 different jobs here, and not all of them are going to be done as well as they would be if you only had one thing to focus on. So you pick your battles, you fight them, and you move this forward as best you can. And that's why we provide these tips to get you through how to build this, and we give you those those samples and all of this stuff so that you can make it as painless as possible and do as much work as you can without being overloaded. Next slide, please. So this is our website again, just the link for that. All of these resources are available to you there. Also under, there's a claims help library that's got a lot of different details. And so you want to follow that. Next slide. And so the Department of Insurance is a great resource for you. If you're having any problems with your adjuster and you need help, for example, if they're not meeting their obligations under the California rules and regulations, if they're not responding to you when you send them a letter and they're not meeting those deadlines, or if you've just got a dispute that needs help, they do have a very, you can go online, you can call, you can do what's called a request for assistance, where they're able to help you with that. And so please take advantage of that. That's a good resource for you. Your insurance company cannot penalize you for reaching out and filing a request for assistance with the Department of Insurance. And if any adjusters tell you that, that might be because they're out of state and they don't know California law, but they're not allowed to do that. Next slide, please. And so stay connected with other survivors. As I mentioned earlier, we have a survivor webinar. It's the first and third Tuesday of the month at 7 o'clock. The next one will be December 1st. It's a great resource to talk to other people about insurance, negotiations, financial strategies. Working is an important source of emotional support. And so, if you're not connected to people in your community, it's a great way to connect to people going through the same things that you are. And then Mark, next slide. Okay, so these are upcoming events we have. So the Survivor workshops are going to be December 1st, December 15th at 7 o'clock. On Wednesday, December 2nd. So any of you who have questions that we do not get to today, and bear in mind, there's nearly 200 people registered for this. So we're trying as best we can to get anyone who's got a comment or question in the Q&A. But if we're not able to get to your question, if you will submit the question in advance to the that Roadmap to Recovery Q&A on Wednesday, December 2nd at 5:30, our team will go through those questions and be able to provide those responses. It will be recorded, so if you're not able to attend it, just go ahead and register so that you can get the access to the recording. Next slide, please. And then these are the webinars that we've already recorded. So if any of these are useful for you, please don't hesitate to view these on the website. The links are here, and they're also available on that website. If you're having any problems reading and understanding your policy, that second one is fabulous. It's very detailed. So after you watch it, you should have a firm understanding. And then your legal rights and your insurance claims rules and how to speak up and communicate with your insurance company are on that last webinar there. And then the last two slides very quickly, Mark, and we will leave it on that last slide. The next one is just stay informed. Please encourage any friends or neighbors that you know that are not communicating with us to sign up here to be able to receive information about future events, updated guidance, and then email info@uphelp.org to get today's PowerPoint and the link to the recording. And then the last slide is, again, just a call out to our thank you, to thank our funders. And then Mark, is there anything on the questions that you're seeing a trend that you want to address before we wrap?
Let's see, I'm scrolling through. I apologize. I'm trying to get to as many as we can here. Let me keep scrolling. I was trying to hit a few
Yeah,
individual.
I see, here's an odd one that I'll answer live now. So for wine collections, so it's a consumable. So yes, so documenting as best you can with whoever you would make those purchases, what the extent of that was. It's worth submitting. I know a lot of people that were made whole on their wine collections. So please submit all of those pieces. Valuation, it's just what it would cost to replace that. So there's a resource in the Napa area called Wine Country. I can't remember the gentleman's name, but he does curated collections of wine from across the country. And so he could be a good resource for you for pricing on that. Garden furniture, if it's like patio furniture, again, you're always looking for what it would cost to replace something similar to what you had. Doors and windows from Bali, that if they were installed in the house and they were not decorations, they would be part of your dwelling claim. But if they were collector's items, I know people who use windows as a decorative item, as a wall hanging. So if that was the case, then you're going to call those a collectible and list that as such on your inventory.
So I see one here. Let me go with this one here. State Farm is refusing to waive the inventory requirement to collect more than our advance. Where can we go from here if we don't want to do an inventory? So it sounds like not in advance, which is good. Good first step. Unfortunately, that advance may or may not have been 25%, 30%, and you might still have quite a bit of dollars outstanding. And if that's the case, if you truly do not want to do an inventory, this might be where a professional might come in and actually be very helpful. Again, we say, try and do it yourself, see what you can do yourself. And if you can't, this might be the appropriate opportunity to bring in a public adjuster who might take 10% of the entire claim, but you may be able to recover that last 70% of contents. So just a consideration. We do not necessarily advocate for or against hiring them. Every situation is different, but that might be one situation where if you're unable to do an inventory, hiring professional help might be worthwhile.
So Mark, the 3-year rule to collect replacement costs apply to personal property if they don't have a total loss. Because they had a total loss on the garage with vehicle, tools, etc. It should be the same, correct?
Let me scroll back. Yeah, here, let me type back into that person. Let me just find where exactly.
I'm just trying to, we're going to try to answer as many as we can. If you need to drop off and you don't have a question, please don't hesitate to drop off, but I want to make sure we get this. So Ava asked about requesting a waiver of inventory requirement for a partial smoke loss. As we say repeatedly, it never hurts to ask. Just be aware that looking at the poll we had, 37% of you asked and were declined, so it's not common. But if you've got extenuating circumstances, you can make that case. For a partial smoke loss, I would say the odds are kind of low on that, just because the loss would not get you to the total policy limit, and so they're going to want some documentation. Let's see. Stanley, yes, please mail your contents waiver to your adjuster because they will take it up the chain of command.
I'm looking. I just wanted to go into the nuance of that other one, Val, because it talked about some of the garage contents, and I just wanted to see exactly what it was. But broadly, yes, you were correct with what you were saying. I should have answered that. In the event of a total loss related to state of emergency, and I don't believe it matters.
Yeah, and Jennifer, I am going to put the link for the webinar that you should look at in the chat. Jennifer has a partial loss, and they're saying there's no visible smoke or ash or soot. And so their visible ash or soot has no bearing on whether you have smoke damage. So I just put that into the chat for you. So Kathleen, about the vintage car collection, you can make the case that you know, it's an antique and should not be, but if your policy is limiting to that, that's going to be a hard push. That might be something, if you're looking at the value of that, that might be worth looking at professional help. That's just that one's, I think, going to be a difficult slog to get over. Collectibles. So things that are not depreciated, antiques, you know, there's a set definition for what is an antique. Collectibles, you know, would be, it's more in the realm of things that are known as a collectible item. So it could be a certain type of pottery or china. It could be a, you know, not to be cliche, but the old stamp collection. And so you're going to build that grouping, that cluster. If you're going to start your inventory with that list, doing that deeper dive on that, I would focus on those. I will say that when you submit your list to your insurance company, especially with antiques, you do need to watch to make sure that they're not depreciating items that should not be depreciated, because sometimes it happens just as it's a huge numbers of things on the list, and those things slip. So you're always checking to see if they've, as Mark said, either excessively depreciated or depreciated something they should not have. Mark, I see you're going to answer live, and I'm going to be quiet for a minute.
Oh yeah, let me back up to that one. So should I submit receipts for replacement of items that are less expensive than the ones that I lost? And this question kind of goes to where I started to open up Pandora's box a little bit, and then kind of retreated with, you know, matching. You know, you're kind of comparing that agreed upon list that you're going to make, your contents list, and negotiate that list with your insurance carrier. You're going to ultimately have this negotiated list probably before you've replaced most of your items, with the replacement cost values listed, the actual cash value amounts listed. And then yes, you know, it's a little bit of a puzzle. It can be a little bit of a puzzle. You know, you can be strategic in how you approach submitting receipts to recover. Obviously, if you've replaced an item less than the actual cash value amount listed, the amount that you've already been paid, that's not an item that you're going to be able to recover anything for. So any replacement item that's above the actual cash value, you can see some dollars flowing back your way. But there, you know, you may have replaced, you know, say there's a couch. You had one couch, and but you ultimately you replace and you buy two couches. One matches the first couch a little bit better. It's closer to the full RC value. There is, you know, a little bit of not game playing necessarily, but if you do replace with a higher value item, that might be the receipt to submit to be able to recover. You can't recover for both, of course, but there's sometimes will be situations where you do want to submit the higher value receipt to match to an item. I hope that makes sense.
All right, so I'm going to answer two questions. One, Patrick had asked about in policy, does the statement, if the cost to repair or replace the property described is more than 500, we will pay no more than the actual cash value until it's complete. And so his question, Mark, was, does the 500 refer to the total of all personal property loss or each individual item?
Here, I'm going to scroll up here to find that question.
Yeah. And then just to respond to Amy, there's tax relief for losses above your personal property coverage. So if you have a catastrophic loss and you have a, a financial loss there, you are able to take that off of your taxes. We'll be doing a workshop on that, hopefully in February. So we'll do financial decision making and then catastrophic loss tax implications. So yes, it is in your interest to do a full inventory, even if you are granted a waiver, because there's you have other recourse there to claim that, to take advantage of that to capture those dollars in a different way.
Yeah, to go back to that other one, Val, I apologize. I don't know. Is there another question that gives a little bit more context here? What provision this is actually?
Actually, I'm thinking,
All right.
if you're not getting it in context, I would say, Patrick, if you want to, if like just literally, if you want to send the that section of the policy, if you want to send it in to us, email that in. We can look at we can have someone look at that and see what it actually means. Okay, because it's oddly worded. Let's see, Derek, can insurance company force you to organize receipts to cross-reference with their spreadsheet? I've seen them try. If it depends, Mark, that really is, it's more dependent on the policy language, right? If they call out what they have to do.
I should have I should have said here too, and that's one of those situations where it may put extra dollars in your, if you're able to organize your own receipts and cross-reference with a spreadsheet, but no, I don't believe that for most situations it's considered required. It might help you out, but I don't think it's a requirement for you to have to match every item. Generally speaking, of course.
All right, so I see gifts. So yeah, valuable items given to you. You're looking at the replacement costs. So, just if you've, again, going back to documentation, whatever you have that can prove you had that, and just figuring out what it would cost to replace, because yes, those things add up very quickly, and you want to be able to take advantage of that as far as your inventory list. Let's see. And we've touched on this a bit. So when your insurance company offers the advance on personal property, the expectation of an itemized list at a later time is if you want to exceed what they've given you on the advance. So if you're looking to capture more money, yes, they're going to expect that list and receipts and to get you beyond that. So unless your advance is very generous, yeah, you probably are looking at the list. Let's see if I submit.
Sorry, I'm just want to follow up on one or two here. It's in writing. I apologize, Val. Let's see what we...
Yeah, no, I'm sorry. I know it's so not fun for all of you watching us. So, so question was why an insurance company would be willing to waive the inventory requirement in previous years, but not this year. It's entirely at their discretion. I mean, when the insurance commissioner makes, he brought forth the guidance on the expedited claims handling. It's his strong suggestion. And some insurance companies will go above, some will go at, right at the level he says for an advance. Some will waive it, some will not. Some will do nothing except what they normally do. And so it really just depends on, it could have depended on what their share of the market was and what was going on. So I mean, you can point that out to them. But I don't know that it's going to change their mind. So you can say, I'd like to have it waived because I see in previous years you did waive it, and and my circumstances are this, and I would like to have that happen. And then Terry asks, it's unlikely we'll be providing receipt for every item before the end of 3 years. So as my friend in the Cedar Friar did, he negotiated extensions and kept providing receipts. If you're wanting to get compensated for items there's no obligation on their part to do that afterwards. It just depends on what you negotiate with your insurance company.
Let's see, I see one here about losing a tractor and how to claim that item, one that does not go on public roads. Again, this is such a specific question to the policy. I mean, a lot of vehicles are not covered. However, go into your individual policy. I apologize, I can't give a more specific answer. See what the wording is for what types of vehicles are not covered, and then go from there. Unfortunately, a lot of them are excluded. But again, look at the actual word in your specific policy, and that should help guide you on the tractor that does not go on public roads.
So Tom had asked about shelves in the house. Again, you're going to try to find something of similar quality at a furniture store, or if they were custom made, then you're looking at what it would cost to replace them with a craftsperson who can do that same work, same quality of work. Sorry, let me make sure I'm very specific here.
Let me take, let's see. So here's a question about the voluntary claim handling reference to recommendation about using any reasonable tool. Again, I think I'd go back to always communicate with your insurance carrier, work with your adjuster, see what they want. But if your list and the list that they request have substantially the same requests for information, an item description, a make, a model, condition, age, if it covers a majority of the same descriptors, then it should most likely be considered a reasonable tool. So again, keep that line of communication open with your adjuster and make sure that list will be, the list in your format will be accepted. I'll go back to the turn your house over analogy, that if everything falls out is contents, how would a refrigerator and an oven not fall under contents? And again, I do just want to say that unfortunately the analogy doesn't perfectly encapsulate everything, every little literal thing, but to go to the refrigerator and oven again, sometimes it's considered contents, sometimes it's considered dwelling and coverage A, oftentimes again, depending on your adjuster. But I think sometimes the rationale is you might have a gas hookup to your oven or stove. The refrigerator might have the water line running. So if it's, if it becomes a fixture that requires more than plugging or unplugging, it might be considered part of the dwelling. But again, it's like all of this, it's a negotiation. Work with your adjuster. If you are grossly underinsured with your dwelling, ask and see if they'll consider your refrigerator and your oven or stove as part of contents.
Let's see. Mark, Amy had a question about the adjuster telling her a claim was closed because they didn't meet an October 30 deadline. It was glass fire, total loss. But when they asked, he wrote via email there would be no impact. They would just reopen it when they submit the inventory. Can you clarify what that means?
I am not sure that I can. I am not sure what deadline. I guess it would depend. I need some follow up on what the deadline was. I apologize. It sounds like
probably a self-imposed insurer deadline. That's what it reads to be.
Well, I'll say going forward, if it opened and there's not an issue, I'd say continue forward like it wasn't closed. Yeah, I apologize that happened. That probably was not a very fun, or probably was a scare opening up that letter.
All right, and then I know we've got Phoebe and okay, so Ava, the restoration. So two things for you on the cleaning electronics or appliances. The first would be to check out that smoke, soot, ash, and soot webinar. I'm going to put it in the comment for you. But the second is definitely go to the December 2nd Q&A, because our staff member who's a specialist in this area will be curating that, and she will give you some very good guidance on that. She knows both sides of that piece. All right, and let's see. All right, CZU fire. So spent personal property inventory after received a 30% advance that did not require, will it force me to submit even? So if they've given you an advance, you know, that advance is for you to use. They're not going to pay you more beyond that, right, Mark? Unless you submit more documentation.
I believe so even more for the amount of the, so I'm not sure that they're not going to take money away if they've already advanced money. You know, they may or may not advance you another percentage, depending on your adjuster. I know that's getting old quickly, but if you submitted inventory and it's 20% and you're submitting your inventory in chunks, if you submit that first chunk and it's less than 30%, they're not going to ask for it back. I think that,
Right.
I'm not sure that.
Yeah, no, thank you.
So let's see what.
So yeah, Phoebe's difference between depreciated replacement value versus a market value. I would say, Phoebe, for what to submit to support your choices. I mean, whatever bits of documentation you've got, usually it's just going to be photos that people had, and then making the case for, if you're not going to replace with the vintage antique, you know, a like modern equivalent would be this. And so, you know, you're going to typically with that, what I've submitted have been, you know, PDFs of or pictures or invoicing for what that replacement would be. So if you're working with a you know, a furniture store, it would be, you know, what is the pricing on that catalog and whatever that image is, and providing that with the pricing and the materials. It's challenging when you're looking at, so you had an antique table and you're going to replace it with a modern equivalent. So that value of that antique table should not have been depreciated, right? And so what they should do is pay you for the value of that antique table, and it's not depreciated. So you shouldn't be worrying about replacing an antique item with a modern alternative. They should pay you outright for that antique item. But for vintage, yeah, because there's no, vintage is a state of mind, or a you know, it's not a very defined term. And antique is just basically defined as by the IRS as a certain age and certain things. And I'm going to find that and put that in the link for you. Hold on.
I just want to point out, the definition of antique for some items might be a certain age or year in terms of, you know, in tax purposes, IRS, but it's not necessarily what they'll apply for your insurance policy. You know, see if the term is defined. If it's not, again, go back to what we were talking about with the regs. You know, is it an item that would normally be subject to depreciation? Has its value increased as it's gotten older, or has it lost value? I think is the rule of thumb. Again, check your policy, see if they define it. But I don't believe it's good to use definitions from other places if there is a battle, if it's not defined. But I wouldn't rely 100% on that. But it definitely is a good springboard. And then I see a question here. Are there any repercussions for insured not following the commissioner's suggestions, bad PR? I think that the question has the answer right in it. They are voluntary claim handling reforms. Insurers do not have to follow them. A lot of them were just codified. A lot of them, a bill passed and making them mandatory, but that unfortunately does not apply until 2021 for most of them. But yes, you can still use that. There's still leverage in the bad PR. They've been going on for a couple of years. So if you've heard any pushback or any whiplash from insurers not following them, that might be the result. Maybe they're more to follow them now. But either way, it still is used as leverage, even though they are voluntary. But other than that, not that I'm aware of, are there any repercussions to them not following them because they are voluntary until next year?
So with that being said, I think Kathy's got the last question. So we actually did okay on answering these. So farm equipment. Yeah, and Kathy, just to clarify, is that, did you have a separate policy for the farm equipment, or did you have the policy that, it included a standout coverage for the farm equipment? Because the breaking that out as that separate category, is it an addition to the policy, like a hobby farm policy? It's a separate provision in the same policy. Okay. Yeah, for you, really, it's going to be what the policy language says. And so that's one that I think if you're able to attend that Wednesday webinar with this question, and we're able to get her to look at that policy with you, I think we'll be able to get you a solid answer on that. Because unfortunately, the answer is it is so dependent on the language of the policy.
I see one more here, and I think we'll end with this one. Our contents in our building's tool shed, et cetera, covered under contents. Are they part of the house? And okay, so my understanding here is so I just want to make sure building means structure here, and you're talking about the home. So normally, if it's on the property, the described premise, then yes, it will fall under your contents coverage. There are limitations for personal property. There are limitations for personal property that is not actually at your primary dwelling, and that usually is capped at 10%. But yes, there is coverage for personal property that is not actually in your main dwelling. But it sounds like this is a tool shed on your property, and most likely, and again, depending on your policy, yes, that the contents will be covered under your coverage C or coverage B if it's State Farm limit. And last one looks like, unfortunately, that's a dwelling. And so I think, Val, we have to wrap it up here, and we thank everybody who's stayed on through the marathon. Again, we wish we could be there in person. I know we didn't have the best 100% answer to all questions, but hopefully you got the gist, and the inventory process goes smoothly for you.
All right, and before we hang up, I am just, Jennifer, there is a webinar to check out, and I just put the link in the chat for you. Thank you all for joining us today. We are so sorry that we're you're going through this, and just just know we're here for you. We'll doing what we can, and please don't hesitate to reach out. Check out the website. Look at all the resources available. If you want that yellow book, please email info@uphelp.org. We'll get it out in the mail to you. And we will be providing as many resources as we have found that are helpful for people in the new year as we can. So, and don't hesitate to reach out when you're struggling with something, and we'll see what we can help you with, okay? Thank you all. Kathy, I see your hand is raised, but I don't know what. Oh, I see the thank you. Okay. All right. Thank you all. And with that, I think we are going to end. Thank you.
Good night, everybody.